Nikolai at daytrading concepts. Today we're looking at crude oil, starting on Sunday night with this set of mirror bars. Price immediately breaks higher above $70, stabilizes momentarily, and follows through to a new high. First pullback we saw here in the overnight action, the Far Eastern session, is a very orderly $500 pullback, and in the European session we get another $500 pullback. These are 50-tick pullbacks, $500 per contract, following through here with consistent demand for prices above $70, higher lows and higher highs. You can see here as the buyers are working the bid higher and higher consistently all the way into the early morning hours and the US pre-market, where with the 7 o'clock mark price sharply retraces to the downside, collapsing on these shoulders or on these lows established earlier in the Sunday session. This being the first major pullback within this progression overnight, also a very steep one at that. It's going to be an actual test for the resolve of these buyers who have been consistently pushing price higher within the Sunday into Monday price action. You can see that we have already been more than 125 ticks here, 0.27, so that's 127 ticks higher than the opening prices, down around 69.50. What follows reveals also the sentiment within the early hours of the US session, where many times the smart money or deep pockets with an agenda for the day will be establishing their positions. Bottom, steep reaction to the upside and going right up to the highs overnight by the time we hit the 9 o'clock mark, following through even higher for a marginally higher high. As we move here to the regular portion of the US session after 9:30, price leaves us a higher low, and again the bid is being worked here. Actually the offer is being worked by the buyers. Higher and higher prices, the bid does migrate. A higher, very orderly price action, and yet again new highs are reached by the time we hit the 10 o'clock mark. This is US Eastern time in the morning on Monday. Moves to the downside, bit of a counter directional move here, and a second leg on this pullback, again roughly $500 on the pullback. This is a two-wave pullback and still defines the market as orderly, consistently bullish. Notice that the lows, even after this significant correction, just under $1,000, let's say, still holding a higher low, marginally higher than the early morning lows found before 8 o'clock. It's now 10:30 here and we're still holding higher lows, even though the sellers did put some pressure on this market midday in the late morning session. You can see the lower highs here. The buyers did stabilize the sell-off in the beginning of the afternoon session, and once again we can see that frequency building up at the lows as the buyers are consistently working the offer. Still no lows broken by the end of the Monday session. Price moved higher to close on an optimistic note. The close of the session above 70.70, well in the upper half of this range between 69.50 at the lows established, and the Sunday night open and the highs just above, just below $71 per barrel. The overnight price action on Tuesday predictably leads to new highs yet again, just above 71. Some consolidation in the European session and a bit of a trail off here into the US pre-market. If I have to frame the price action so far going into this week, if I have to define the structure of this very consistent, orderly, cautiously bullish progression higher, I would use the lows here, the initial shoulder created on Monday, and I would look to frame the slope at the lows with this line reflecting the frequency at the highs, usually the first significant high set up here within the session. I'll use the one right around 7 o'clock, and for the most part you see that this gently sloping coil or channel, if you will, is leading predictably to an expectation of a sloped ceiling and a sloped floor, expecting price to rotate between these two boundaries. Within the US pre-market on Tuesday, once again similar to Monday, we get a steep correction, but the sellers yet again made a solid bid at a higher low here, judging by the strong reaction that we get immediately back to the tops. As we get close to the tops and price yet again makes an attempt on new highs, it seemed that the congestion above 71 is attracting some sellers as well. Notice that as we get the poke above the door, price gets rejected with a couple very strong bars, and then the follow through demand, judging by the higher lows, is met also by some selling. The tails here are pointing upwards, and the consensus closes are at or below 71.10 in this area, forming a cluster at a minor shoulder here. As price sells off a little bit and rallies back again into the door, this cluster here gets confirmed. You can see the congestion just below the door, suggesting that the door might be shut for the buyers. For the first time, price seems to be reluctant to find these higher highs readily above 71.15. Here's how some of our traders were handling this early morning action on Tuesday. Elena was short on Monday, looking to see a correction down, likely towards the session lows from Monday, and indeed she did catch the move within a reasonable margin here, but as price stabilized and turned back around, she folded this position around break even, attempting the same maneuver at this door formation. Great entry here for Elena, just behind the door into this cluster. Beautiful timing, and I guess a conservative management here, looking for a move only down to the lows, not asking this consistent market for too much of a sell-off. Another perspective on the same action on Tuesday morning. This is Andy's chart. Andy was long in the early hours here, picking up a shoulder after a steep in this steep reaction where the bid stepped up to prop price, and indeed he held this one into the attempt of a new high, but as he noticed that the sellers are showing up here, he tightened his stop. He got taken out of this long position, still marginal profit here, and he flipped the script on the buyers to go short with a stop well above the current high, his position being protected by the sellers that are working this door, and the development here was predictably lower. Hands-off management, 3-to-1 opportunity for this correction here into the mid-morning on Tuesday. Solid performance from our traders. You're observing attention to detail, great positioning, perfect timing. For my part, I was focusing on a long opportunity to exploit the overall progression and consistency of this market, looking for prices well above $71. That late in the progression, for me to participate, I would need to see some of the late participants get squeezed out of this market. Yet, I want to see a similar event to this one where the buyers managed to stabilize at confirmed support. With what we have on the board, I would need to see positions mostly established on Tuesday to get put into the deficit. Yet I want to see price stabilize at levels where we have previously seen solid participation. So there's this level here, this congestion of pivots between 70.10 and 70.20, and of course a little bit earlier the lows established right around $70 on a $300 per contract stop. Positioning somewhere within this level would likely give me safety, with most of the previous lows being in front of my stop, therefore providing safety for the position. As I observed the retracement here, there's a good frequency which matches the progress on the way down. The moment of truth for this potential scenario and for this template that I'm looking to exploit is right here, where price is stabilizing in the late morning around 11:30 at yet another higher low, but the upward sloping floor is no longer acting as solid support, but rather looks somewhat permeable. Momentarily there was a poke to the upside. This frequency should be adjusted like that. And you can see that the frequency breaks, yet price immediately gets hammered, suggesting that indeed there will be a run on the lows here. You can see that the low breaks immediately. The price action speeds up as we are picking up all the stops. There's a long squeeze here, and as price moves down to these levels of interest, I observe a bit of a bump, and then as we see the high activity bars, this tiny bars where the range is small, suggesting that significant amount of orders are changing hands. I'm looking to position, as is habitual for me, relatively early, very much where the placement makes sense, just above 70.10 with a $300 stop just above 69.80. If you look here to the left, you will see that that provides safety here behind most of these pivots established in the beginning of the week on Monday. In short, this is a classic case of late buyers, in this case, getting squeezed out only as they're selling their positions to pass them along to better placed participants, savvier, earlier positioned traders, in this case longs, which are picking them up here. So the positions are pretty much getting turned over from the weak hands to the strong hands. If I happen to be correct, my stop should provide safety, since a lot of resting buy limit orders at these already confirmed compelling prices just above $70 per barrel will be filled and provide bullish pressure. This is what we observe indeed. The more conservative placement for this position, rather than picking up here the slowdown just above 70.10, would be to see the actual bullish reaction and to participate about 50% back. The positioning would be roughly $100 higher, so less of the stop would provide safety and more of it would be used to actually participate. But the benefit of the doubt here now goes with the buyer, since we did see the significant move higher. Towards the rest of the session, towards the end of the session, for the rest of the session, we observed that familiar stabilizing of price and bullish behavior we saw on Monday. Higher prices to close well inside the daily range on Tuesday, which counts as a very bullish event, and overnight the strength here on Wednesday continues higher. My target was positioned just short of the sloped ceiling, which has defined the consistency of the progression so far this week. This is hands-off management with resting orders at the CME. This fill here, very good. I'm happy with it, just short of the line. 147 ticks, just short of 5-to-1 realized reward versus risk. 147 ticks per contract. We did see higher prices during the Wednesday session, as I expected, but I was very happy with the 5-to-1 trade here that I managed to bag. There was a follow through long, I believe, yes, that I picked up just under, well, I guess just around 72.50. This one, I believe, didn't eventually develop any higher, but still very good performance here in the midweek or the dip on Tuesday, which provided this discount. Again, late participants from the Tuesday session getting squeezed out only to pass their positions to the stronger hands, which are positioned at better prices and earlier in the week, in this case Monday morning to Monday afternoon. It's a classic template for me, and is one that we discuss in a lot more detail at Day Trading Concepts. It's one of many templates we use to strategize and pick up great risk versus reward opportunities. We'd like to create thick context for the market to understand where the positions are. We always look for good placement, great timing, and sizable reward for the risk that we are taking. Let me know if you have any comments or questions. This is definitely an advanced level setup where there's a lot of moving pieces. Like, share, and subscribe if you do like the content, and I'll catch you traders in the next video.